following content is a technical analysis on Tesla Incorporated, a company of the consumer cyclical sector and auto manufacturers here off the daily interval. Rewind back in time some of the playlists and short opportunities that I had conducted here off of Tesla. And the reason why I love trading Tesla, it has just insane beta moves, huge swings and gains in one direction or the other. And it's just a really usually trades to the technicals in a pretty traditional state, followed by some key fundamental news. If you can synchronize it with a potential fundamental headline, it's ever more better. As I have previously stated in multiple videos that I have timestamped trading Tesla, two big short trade setups that really were double-digit crashes. The charts typically govern and generate the fundamental headline. Whereas we had this massive, colossal primary uptrend line off the October 2019 reactionary lows, cut right through the COVID crash lows there, and just on a sell signal, put in a nice, clean, divergent high. I'll zoom in here, and that's exactly what we had. And I said, watch on a break, watch on a solid daily candle close below, issuing a sell signal, and we completely gapped down, never looked back, and that was good for a nice, clean 62% crash, and really darn near close to the button, right off the 102.34 price support. Some of the older levels that I had in that video bounced right amongst it, and again had just a massive surge to the upside. Whereas in my recent video short trade setup, we put in a nice, clean symmetrical triangle pattern with mass consolidation with a nice divergent high there that we had conducted, and we snapped it. We ended up snapping it, putting in a nice, clean sell signal amongst dual support off the 190.89 price support, and that was good for a nice, clean double-digit drop there, and really to the button. And I know this was pretty updated on a complete gap support, right off gap support, that 154.05 price support. We ended up surging right off of it. So again, this is not just a channel or videos showing you where I conduct my short trade setups, but also where you're going to dollar cost average in a significant downturn if you're a long-term investor in the company and you believe in the company in the long term. So here we are once again, primary reactionary high downtrend line off the April reactionary 2022 highs here, and we've put in a nice big divergent high now, coinciding with this primary downtrend line here, offering an objective entry short trade setup, whereas you could have some scale up, scale out, up above if we do take that out. So for the bullish case scenario, this does look this would be a powerful inverse head and shoulder bottom, where this would actually be the neckline, where the primary reactionary high downtrend line is the neckline. So a breakout above it would be exceedingly bullish for a much stronger move to the upside. And usually these inverse head and shoulder bullish continuation patterns have a very powerful move to the upside, as I had stated in my previous video. If you saw the technical analysis and price prediction targets that I had for Palantir, symbol ticker PLTR, and it was a powerful move off a inverse head and shoulder bottom there. So again, just something to watch out for, and that the risk reward ratio favors a move to the downside, and this is where I will be skilling in right now amongst that 223 trading spot price 223.40, just for another double digit first target breach down there to the 190.89 price support, which will correlate with the 200-day moving average and the neckline for the very first neckline of that symmetrical triangle pattern there. So here is updated version here, whereas stop out, you begin scaling out for a 4.9% drop, scaling down for that first target. I'll give you another target here, this target, which would be good for a 9.7% crash, down to that second target, 190.89, for a 13.7% crash. And if we overshoot that primary reactionary high downtrend line, which would result in a false breakout, which will coincide with the 50 exponential 50-day moving average, call it a dual line of support, down to 177.68. That would be a big level to all eyes, algos, machines, institutions would have an eye on it. And I would expect a very powerful swift move if broken down to the 177.68 for a double-digit 20% crash, down to a complete backfill of the 167.49 gap support for a 25% crash. And if we ultimately take that out, that's it could be a pretty big sizable move down to 154.05 for a 31% crash. So all eyes on this 190.89 price support. The risk reward ratio as of now just favors a larger move to the downside versus going long here. Again, just would not be favorable for the long side. But again, bull traders, dip buyers, long-term investors, they want to see a solid breakout amongst that primary downtrend line and an escape move to the upside, burn out these negative and bearish divergences that we have amongst all three technical momentum indicators. And again, if we react to this primary downtrend line, these negative and bearish divergences will only grow larger in a complete backtest, retest of the zero line thresholds on all momentum indicators. And again, it would just be very damaging, leaving the health of the technical stock price vulnerable for a next move to the downside.